Forget the broader tech slump of 2025 for a moment, because we're zeroing in on a company that's really defying the trend. Palantir.
Yeah, it's pretty striking. Their stock has, rocketed over 60% this year.
Making it a standout performer in the S&P 500, easily.
And what's fascinating here is this surge. It isn't happening in a vacuum, right? It lines up with this massive acceleration we're seeing in AI adoption across industries.
Exactly. So to really get what's behind this ferocious growth, as one report put it, we're going to dissect Palantir's Q1 2025 earnings report.
Right. We're drawing from their official release, as covered by outlets like CNBC and Investors Business Daily, plus some useful insights from MarketWatch.
Our goal today, for you listening, is pretty straightforward. Cut through the numbers, understand the core story here. What are the key takeaways?
What does this performance actually signal about where Palantir is headed?
And, crucially, why should this matter if you're trying to get a handle on the bigger tech picture, especially, the whole AI landscape that's unfolding so fast?
And, it's a story with a bit of a twist. Despite what looks like great news beating revenue expectations, raising forecasts, the stock actually dipped after the announcement.
Which is interesting, isn't it? Why that apparent disconnect?
That's definitely one of the key things we need to unpack. Okay, so should we dive into those headline numbers first?
Let's do it. So for Q1 2025, Palantir brought in $884 million in revenue. Now, analysts were expecting, around $863 million?
Yeah, so a decent beat there.
But the year-over-year comparison is where it really jumps out. That $884 million is a hefty 39% increase from the $634.3 million they reported same time last year.
That's substantial growth. A really big leap for a company their size.
It suggests, really strong demand.
It does. And looking at profitability, their adjusted earnings per share, that's profit per share, after some tweaks came in at 13 cents. Met expectations there.
Okay.
But as Investors Business Daily noted, that's a significant jump, 62% from the previous year.
62%, wow. And their overall net income
also climbed nicely, rose to about $214 million. That's 8 cents per share.
Awesome.
Up from roughly $105.5 million, or 4 cents per share, back in Q1 2024.
So across the board, financially speaking, things look pretty robust.
Yeah, definitely solid numbers.
Okay, so here's where it gets really interesting. What's actually powering this growth? What are the drivers?
Well, the reports point to strength in both areas, commercial clients and government contracts. But the growth in the U.S. commercial sector is particularly striking.
How striking?
We're talking a massive 71% year-over-year increase, reaching $255 million just in U.S. commercial.
71%, okay.
And Palantir clearly expects this momentum to continue. They're projecting U.S. commercial revenue to actually exceed $1.178 billion for the full year.
Over $1 billion just from U.S. businesses. That's a really powerful signal about their traction in the private sector, isn't it?
Absolutely. A huge acceleration.
Yeah, and it's not just businesses, right? The government side also saw pretty big gains.
Yeah, very solid. 45% year-over-year increase in government sales, hitting $373 million.
And CEO Alex Karp apparently credited that, at least in part, to more uptake by the U.S. defense sector.
That's right. CNBC noted that specifically. So, yeah, it looks like they're firing on all cylinders.
Both commercial and government pulling strong.
Precisely. And this brings us to what seems to be, the core of their current momentum, this surge in AI software adoption.
Ah, the AI angle.
Yeah, CEO Alex Karp was pretty emphatic. He stated Palantir is, quote, delivering the operating system for the modern enterprise in the era of AI.
Operating system for the modern enterprise. That's a bold claim.
It is. He emphasized they're in the middle of a major tectonic shift in the adoption of their software.
A tectonic shift. That's strong language.
Yeah.
It really highlights the scale of change they believe they're enabling.
And what's interesting here is thinking about Palantir's background. They started heavily in government, defense, dealing with complex, secure data integration. That experience probably positions them uniquely well to handle the messy reality of enterprise AI deployments now. Their platforms are built for secure, scalable data stuff.
Which is a huge pain point for companies trying to actually use things like large language models effectively and safely, I imagine.
Exactly. So Karp described the demand for LLMs and the software supporting them as turning into a stampede.
The stampede. And a ravenous whirlwind of adoption.
Those were his words. It paints a picture of, intense interest.
So when he says operating system for the modern enterprise in AI, maybe for someone less familiar, think of it like the foundational plumbing. the software that lets all the different bits of a business, their data, their processes, actually work together to power AI tools.
That's a good way to put it, like how Windows or Mac OS manages your computer so applications can run, but for enterprise AI.
Got it. And this conviction clearly shows in their forecast. They raised guidance, right?
They did. They bumped up their full-year revenue outlook, now expecting between $3.89 billion and $3.90 billion.
Up from what previous?
Previous range was $3.74 billion to $3.76 billion. So a decent jump suggests they're seeing even more opportunity than they thought just a few months ago.
And for the current quarter, Q2, also looking strong.
Yeah, Investors Business Daily highlighted this. Palantir expects revenue between $934 million and $938 million for Q2. Let's call the midpoint $936 million.
Okay, and how does that compare to what the market was thinking?
Well, the consensus estimate was closer to $899.4 million. So they're guiding significantly higher than Wall Street expected.
So beating past expectations and also guiding above future ones, that's usually a good sign.
Usually, yes.
Okay.
And it's not just revenue. They also boosted their forecast for adjusted free cash flow for the year.
Free cash flow being the actual cash generated after expenses and investments, right? A key health metric.
Exactly. They're now expecting between $1.6 billion and $1.8 billion in adjusted free cash flow.
Okay.
And adjusted income from operations also raised to between $1.711 billion and $1.723 billion, all pointing towards not just growth, but increasingly profitable growth.
And the deal activity itself, did they give numbers on contracts signed?
They did. Gives you a sense of the scale. They closed 139 deals worth at least $1 million each just in Q1.
$139 million plus deals in 3 months. That's busy.
Yeah, and breaking it down further, 51 of those were worth $5 million or more.
Okay.
And 31 deals actually topped $10 million.
So landing some pretty substantial contracts, not just lots of small ones, both government and commercial, presumably.
That's the picture, yes. Big, significant deals.
And Karp's own commentary reinforced this.
Very much so. He described Palantir's rise as unparalleled. Positions the company clearly as a leader in AI solutions for, well, everyone, governments and corporations.
Did he mention specific industries they're targeting with generative AI?
He did. Specifically highlighted focus areas like healthcare, energy, and manufacturing. Gives you a sense of where they see the immediate impact.
Right, critical sectors with complex data needs.
Exactly. And he just generally conveyed extreme confidence, saying results keep surpassing even their greatest expectations.
Okay, so let's circle back to the puzzle. We have this stream of seemingly fantastic news. Revenue beat, strong growth, raised guidance, big deals, confident CEO.
Right, everything looks positive.
So why did the stock price actually fall after the announcement? CNBC said around 9%. IBD noted over 5% after hours.
It does seem counterintuitive, doesn't it?
Yeah. The reports themselves didn't give one single reason, did they? But they hinted at possibilities.
Right. No definitive answer. But the main suggestion revolves around high expectations. Investors Business Daily used that phrase. The stock fell amid high expectations.
Which makes sense when you think about it. The stock was already up over 60% this year before the report.
Yeah, and it hit an all-time intraday high back in February, so the market might have already priced in not just a good quarter, but an absolutely spectacular one.
So even beating estimates might not have been enough if those estimates, or maybe the unspoken whisper numbers, were just incredibly high.
Could be. Investors might have seen the strong performance but thought, okay, great, but is this growth rate sustainable? Or maybe looked for even more explosive AI-related numbers, given the hype.
Or just decided to take profits after such a big run-up. Market reactions are complex, rarely just about the numbers in isolation.
Exactly. It's about the numbers versus the expectations for those numbers. And maybe some underlying questions about competition or long-term margins, even if not explicitly stated.
But while the immediate stock reaction was negative, Investors Business Daily did point out some underlying technical strength.
Yeah, a couple of interesting points for those who follow technicals. They mentioned a composite rating of 99 out of 99.
99 out of 99. That's basically perfect, right? Top 1% of stocks based on growth metrics.
Pretty much, yeah. It indicates very strong fundamental and technical characteristics historically.
Okay, what else?
An accumulation distribution rating of B+.
Which suggests?
It looks at buying versus selling volume. B+ suggests more buying pressure from institutions than selling, generally speaking. So maybe suggesting longer-term investors are still accumulating shares despite the post-earnings dip.
Interesting. So some dip, but maybe underlying institutional support.
Potentially. And one more technical point. They noted the stock was forming a new cup-based pattern, according to Market Surge, with a potential entry point around 125.41.
Okay, so for technical traders, that's a specific pattern and price level to watch for a potential new upward move.
Exactly. Something chart watchers would be looking at.
All right, let's try and bring this all together for you, the listener. Palantir clearly showed really significant revenue growth in Q1.
Yep, driven by big gains in both government work and especially that booming commercial sector.
And it seems undeniable that the uptake of their AI software is a huge catalyst here.
Definitely. They beat revenue expectations, raised their guidance for the rest of the year, signaling real confidence in their momentum.
And the number and size of the deals they're closing seem to back that up. Now, that market reaction, the stock dipping, might seem odd at first glance.
Yeah, a bit puzzling.
But hopefully, walking through the context, the huge run-up beforehand, the sky-high expectations in the AI space helps you understand why that might happen. It's complex.
It really is. Market valuations, investor sentiment, especially around something as hot as AI right now, it's not always straightforward.
So this leaves us with a pretty big thought to ponder, doesn't it?
I think so. Considering Palantir's positioning, calling themselves the operating system for the modern enterprise in the era of AI.
And their strong growth in both public and private sectors.
What are the broader implications for how all organizations are going to use AI in the coming years? If Palantir's approach gains traction, what does that mean?
And maybe what are the unseen challenges, or perhaps even the bigger opportunities, that could emerge from this tectonic shift that Karp talks about? What comes next in this AI-driven transformation?
Yeah, that's definitely something to think about long after this deep dive. A lot to consider there.